Is a housing market crash looming? A deep dive into current trends and potential risks. As we assess the current state of the housing market, the question on many minds is whether we're on the brink of a crash. The summer of 2024 has been marked by record highs in home prices, followed by a slight dip in July. This recent fluctuation has sparked widespread speculation. Are we witnessing the early signs of a significant downturn, or is this just a seasonal blip? To better understand the situation, let's delve into the data. As of now, the median sale price of a home in the US stands at $439,500. Over the past 5 years, home prices have surged by an astonishing 47%. Even on a year-over-year basis, prices have risen by 4.1%. However, from June to July 2024, there was a slight 0.6% decline in prices, prompting concerns about whether this could signal the start of a broader downward trend. It's crucial to keep this in context. Similar price dips between June and July occurred in 2023, 2022, and 2021, likely due to seasonal factors. So, what would it take to trigger a full-scale housing market crash? One possible catalyst could be a surge in foreclosures, reminiscent of the 2010 crash when 2.9 million foreclosures shook the market. However, today's landscape is quite different. Currently, there are about 1.8 million homes listed for sale, far below the number seen during the last crash. Moreover, foreclosure rates are actually lower in 2024 compared to previous years, indicating that foreclosures are unlikely to drive a market collapse anytime soon. If foreclosures aren't the trigger, could an oversupply of homes lead to a crash? While the number of homes for sale has increased by 17.7% from last year, bringing the total to 1.81 million, this is still below pre-pandemic levels, which were around 2.4 million in July 2019. With supply still constrained and demand strong, the likelihood of an oversupply-induced crash seems low. Perhaps the most plausible scenario for a market crash would be a severe recession, resulting in mass unemployment and a sharp decline in demand. However, such a scenario appears unlikely in the near term. The US government and the Federal Reserve are acutely aware of the risks posed by a deep recession and are actively working to avoid it. With the current debt crisis looming, the Federal Reserve is expected to begin cutting interest rates in September 2024. Lower rates are anticipated to stabilize the housing market by reducing mortgage rates, which have recently dropped to a one-year low of 6.46%. If the Federal Reserve continues to reduce interest rates, we could see the 30-year fixed mortgage rate fall into the 5% to 6% range later in 2024, with the potential to dip below 5% in 2025, assuming inflation remains under control. In summary, while the housing market is experiencing some fluctuations, there are no clear signs of an imminent crash. Foreclosures remain low, supply is constrained, and demand continues to outstrip availability. The US economy, buoyed by the Federal Reserve's policies, seems unlikely to slip into a deep recession that could trigger a market collapse. Although uncertainties persist, particularly with potential inflationary pressures, the current indicators suggest that the housing market will remain relatively stable in the near term. The focus should be on closely monitoring key factors like interest rates, inflation trends, and overall economic stability, rather than anticipating an immediate market crash. A severe recession combined with high unemployment could indeed spark a wave of foreclosures and a sharp drop in demand, potentially leading to a housing market crash. However, it's important to remember that in such a scenario, the government and the Federal Reserve would likely intervene to prevent a deep recession. Their response would likely include printing more money and lowering interest rates, measures that could actually inflate home prices rather than cause them to crash. Many people are hoping for a housing market crash, not out of a desire for economic turmoil, but simply because they want home prices to become more affordable. The longing for affordable housing is understandable. Who wouldn't want that? But while the aspiration is noble, the reality is far more complex. The belief that home prices must improve simply because affordability is currently challenging is a misconception. The situation, as difficult as it is, could worsen before it gets better. For affordable housing to become a reality, several things need to happen. More homes need to be built, inflation needs to be reduced, wage growth must outpace the cost of living, and the labor market must improve. Yet, we find ourselves facing a persistent housing shortage, ongoing inflation, wage growth that isn't keeping pace with inflation, and a weakening labor market. It's not my intention to sugarcoat the situation or offer false hope. The truth is that there are significant challenges to be addressed, and they are not being adequately tackled at this time. If you're trying to buy a home in this tough market, it's not hopeless, but it will be more difficult. For those who already own a home, there may be a sense of relief, especially if you've been a homeowner for more than 3 years. You might feel fortunate to have avoided the worst of today's economic challenges. My goal is to provide you with honest, straightforward information and financial education without any spin. I don't want you to wait for a housing market crash that may never come. People have been predicting a crash for years, yet here we are and the market hasn't collapsed as expected. Some even claim the market has already crashed, but if that were true and homes were so affordable now, why aren't they snapping up all the available properties? This should be their moment to capitalize, right? The bottom line is that while the desire for a more affordable housing market is widespread and understandable, the economic complexities at play make a significant crash unlikely in the near term. Instead, we may continue to see challenges in affordability, but those who are patient and well-informed will be better equipped to navigate these challenges.